Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Hey traders, John Howell here, and in today's video I want to cover something that I've been really looking at a lot from a technical point of view, and all you guys that think I don't look at fundamentals, I also do look at fundamentals as well too, but you know, this looks really bad right now, at least for the short term. Long term, I don't know what's going to happen there long term, but really the short term. So in this video, I'm going to be covering both the technical point of view and the fundamental point of view from you guys. Now, just to rewind based on that, a lot of people say that I don't look at fundamentals. And the reason why I don't look at fundamentals is because even though fundamentally I don't know what's going on, as long as I've got my, and this might sound really hard to believe, but as long as I've got my setup in place on the charts, and I'm not trading close to an announcement, a dividend announcement, or dividend, or a profit loss announcement. What's the word for that? I'm losing my mind here on a Sunday morning. But you know what I'm getting here, right? Like oh man, I've lost my mind with that. Anyway, the earnings announcement, that's the one, earnings announcement. But the reason why is because as long as I'm not trading within those time frames, then I don't need to know the fundamentals. Why? Because most of the time that I'm trading the markets, I'm in and out within a couple of days to a week. Earning as and earning as much as say 50% to 100% return on a good trade that I would trade. So that's the reason why I don't look at fundamentals. That's the reason why I don't use fundamentals, and I don't need to know the fundamentals. Now, when I flip the script on that, where I want to hold long-term buy and hold something, then all I do is I take my system that I use on the daily charts, and then I flip it over to apply it on the weekly chart. And do you know, on average, that the same system I use for the daily chart, which gives me a good, say, 2 to 5 day move, or in some cases I have a longer term play where I'm holding it for maybe 3 or 4 or 5 weeks. They can, and some of those trades can do really well for trading. They can do 300, 400, 500%. I had one trade last year go to almost 1,000% return on that, and it was about 4-week time frame. That's what I call a longer term play within the system, right? But that's the reason why I don't look at the fundamentals of companies, because I don't need to know. I don't need to bog my mind down with all this stuff that's going to sway my decision either way. Because just because maybe the fundamentals of a company right now doesn't look good, doesn't mean that stock is not going to go for a run for a few weeks. Do you know what I mean? So overall, by me knowing all that garbage, which to me it's garbage the way that I trade, is I don't need to know it because I'm going to be in and out of it within a short time frame anyway. Like, the fundamentals doesn't mean what's going to happen. The fundamentals of a particular stock or even the economy does not relate. Oh, there you go. The fundamentals of an individual stock does not relate to what it's going to do this week, right? We may have really good now. We may have a stock that's doing really good fundamentally, and it pulls back for a whole month. Stocks do that all the time. Makes sense? Or we may have a stock that's doing really bad fundamentally, and it goes for a nice run to the upside for 2 or 3 or 4 months. Just what I'm trying to say there is that there's, for me personally, is that the simpler my trade, the simpler my trading gets, which means I just use a simple system, and as long as I'm not trading within the guidelines of when the earnings are coming out, then I just want to keep it really simple, and that's the way you should approach it, right? Trading can be less. We don't want to bog all this information down. Why are we doing that? Why are we stressing ourselves out with all this information, which is not going to help us? At the end of the day, when we're trading the markets for income, we trade the technicals. The technicals simply mean that we wait for a pattern, right? We wait for our setup to appear. Doesn't mean we're going to trade every day. Actually, that's the worst thing. I don't recommend you trading every day. Just last month alone, for me personally, there was only 3 setups that appeared last month. Oh my goodness, John, that's not much. But do you know every single one of those generated a profit? So my question is, how did you go last month? Were you stressing out about, oh my goodness, this fundamentally, economically, everything looks really, really bad. So therefore, you're stressing out and you're trying to find what's going on, all the fundamentals and what's happening right now, and you're stressing out about that, and are you trading in, you're trading out, you're trading like a madman, you're getting in here, you're getting out here, and you're all over the place. Well, how did you go last month? What did you do last month? And I'm trying to share with you that there was only 3 setups that appeared last month for me, but it was a 100% success rate. And all I do is wait for my setup to appear, right? I get up every day, I run my scans, and what it is, I have scans, and me and my private clients have the scans, and we run our scans, and every day we look at the markets. And if there's no trade for a whole week, then there's no trade for a whole week, right? We don't trade. I don't believe in trading a lot in the markets. But what I do believe in is trading very high probability. I don't want to be trading a lot. Trading a lot is too stressful for me personally. I don't know about you, but being very active in the markets, one, that's going to cause a lower win-loss ratio. Secondly, it's going to cause me to be more tired because now I'm so much more active in the markets and it uses so much energy. And thirdly, I'm going to make a lot of mistakes because I'm so in and out, in and out, in and out, in and out. And that is never the way to go. To do that. And I don't know about you, if you can do that, fantastic. I take my hat off to you. I'm not saying that's bad. I'm just saying for me personally, I want a very low stress environment. And that simply means I'm going to wait for a really good setup like last week, right? Last week, me and my private clients, we had a phenomenal setup, right? And one of my private clients got out of that trade for close to 100% return in like one day. It was a phenomenal setup, right? So look at that, in and out with 1 or 2 days. Some people got less than that, and one of my private clients got 100% return within one day, right? So as you can see, right? But the question is, what if you had 10 grand on that thing? What if you had 10 grand on all 3 trades that happened last month, all 3 setups? You would have had a really, really nice month and relaxed, right? Only trading 1 hour per day. So I hope you can see that that's the way to go with these markets here. And, I'm using this whole preference here to this video because I'm about to talk about fundamentally what's happening in the financial markets, right? That's why this looks really, really bad. And it's the banking sector. I'm going to talk about stocks, fundamentals about what's happening right now on the interim, right? On the interim, but also technically as well too. So just the last sort of point based on what I just said there, guys. And oh, by the way, if you'd like to become a private client of mine, then just go to GetJohns, Johns, GetJohns with an S, help.com. There's an application form there. Go fill it out, and then you may be a good fit for my coaching program. My coaching program is all about you learning the strategy that I'm going to talk about right now. You're getting a set of scans where you run your scan every day, and I'm pretty much there every day helping you and so on and so forth. But if you really need help with your trading, go to GetJohns, Johns, help.com. There's an application form there. Fill it out, and I'll be happy to talk to you about that. But moving forward, guys, same with that's based on what I said there, based on a fundamentals based on the individual stocks, right? Like for example, if we look at something like Apple, right? I've been long Apple now for quite some time. I actually down here in the middle of March, I actually went long. So did my private clients. But if we look at Apple, right, and we look back Apple over time, look at this here. Apple did nothing for quite some time through here. Apple had a very nice pullback through here. Not much going on through here. Because we had this pullback, does that mean Apple was a bad company? No, look at this here. Apple had a major pullback here from as high as, 190 down to 150. It wasn't a major pullback, right? But you see what I'm saying there, right? Apple is a fundamentally good company, but doesn't mean we're not going to get pullbacks. So just because something fundamentally is good, and so therefore, for me personally, I trade the chart, right? And the chart is giving me a sign that we're likely to move in this direction, at least for the short term. That's all I need, right? I just need a very massively high probability system that when I get into it, within 2 to 5 days, that it's run on for that. What I mean by that is, I know sometimes I get into it and the very next day, like our trade last week, guess what? We're in and out within 1 day. Sometimes you get into it and it doesn't do much for 2 days or 3 days, and then suddenly 4 or 5 days later, it's running on. So that's why I say 2 to 5 days on average, right? So if you're trying to look at fundamentals, and a big mistake is that if you're looking at fundamentals of, say, a stock, and then you're trying to trade the market, you're getting in today saying, oh my goodness, this is so bad. Fundamentally, I'm going to get into this stock right now. And 2 days later, you're getting out of it. That's so incongruent with what you're doing there. Don't use long-term fundamental analysis for a short-term trading approach. You're so incongruent there, and you're always going to get unstuck. If you're using fundamental analysis and we have really good stocks, how could you use that analysis? Will you wait for big dips in the markets, a very nice pullback, just like Apple did recently, fundamentally good company, then buy on that and hold it for years, right? See what I'm saying there? That's using fundamentals and investing in the markets at the same approach. For me, trading the markets is just all about short-term moves, and I'm looking to do that because I'm looking to and I do generate an income on a short-term move. That's all I'm at. And thanks to options, I can get really good returns on a very short-term move. Then that's all I'm looking for. 50%, 100%, sometimes a couple of 100% return. But I hope you can see that that's the same thing there, right? And same thing for when we're looking at the economics, right? Just because something economically looks really bad doesn't mean we're not going to get stocks to move to the upside. Right? So as we saw, and in fact, we saw, right, when in the middle of March, when everything was going on, pandemic, national emergency, shutting down the economy, we actually started to find a bottom then and we started to rally, right? So everything's not black and white when we think something is really bad for the economy. Make sense? So with all that being said, I'm just trying to preference why most of the time I'm not bringing up fundamentals, because for me personally, all I'm worried about is, okay, at the end of the day, trading is based on this, okay? Like I talked about with my trading last month. I had 3 trades or 3 setups that appeared, and every single one of those made a profit. What more do you want? Well, I want more trades, John. Well, do you know if you actually got more trades, you'd actually have a lower win-loss ratio. That's going to cause you to have more doubt. That's going to cause you not to have the confidence in your system, and that's going to cause you to make more mistakes, and it's a big downhill barrel from there, right? Makes sense, guys. So it makes sense, right? So I'm all about, with my trading, is taking less trades throughout the year, but having the confidence that as I grow, and that's what's happened, to go from a $500 trade to a $5,000 trade to a $10,000 trade to a $15,000 to $20,000 trades. You know, when you start to do those numbers, and you can do 50, 100% or more on a particular stock in a matter of days, as you can see, right, you don't need too many of those trades to be doing a really good income throughout the year. So more is not more in the markets. Less is more, and then having that's why I'd rather trade a system that doesn't have a lot of trades, so I can actually not stress, right, and not be trying to get in and get out and get in and get out every day. That's not going to cause me to be relaxed and be focused in the markets. And I strongly recommend, if you're trying to look to make money in the markets, it's the opposites with that. More trades equals lower win-loss ratio, which probably is going to equal you making more mistakes and probably you not doing well. Less trades equals less mistakes, equals really good high probability, and overall over the long term. And that's what I focus on with my private clients. My goal with my private clients is get them to a point where they know the system inside and out. Them themselves are a good trader, and they are slowing down and they are focusing on being a good trader and just be patiently waiting for their setups. And then over the years, they're trading 1 hour a day, which simply means they're looking to get in positions in the last hour of the market close. And that's all they do, right? And they just look at the market and trade them. They get in and get out of positions on the last hour, and that's all they do. And that's what I want for you as well too, right? Is like having a very high probability win-loss ratio, not trading a lot, but massively high probability, using leverage like options to do really well from those trades that do well, and having less stress because you're only trading 1 hour per day. And then that's what I call the perfect system. So anyway, so as I said before, guys, go to getjohns, JOHNS, help.com if you're looking to become a private client of mine, and then I'll call you, and then we'll see if you're a good fit or not. So let's actually go now into the banking, right? Let's actually talk about what this stock was, or what I was going to get into this video, but I want to preference that first, okay? Let's actually talk about the banking sector here, right? And then I'm looking at the XLF, which is the financial sector ETF here. Here are some things, okay? When looking at the markets right now, I'm noticing a few things here. Firstly, let me actually just bring up a longer term chart here for a minute. Look what's actually going on here. All right. So firstly, if I bring up some trend lines here, let me bring up some trend lines. Firstly, what do I see through here? All right. Let me just bring this down through to here. All right. I'm just bringing up this trend line to make sure that it's all good like that. Right. So you can see this trend line is really, really valid. Picked it up through there. Okay. And you can see where we're at right now. So this major level of support back here. Look what happened, right? We dropped all the way back down. Now this is technically, right, guys, okay? Technically, and then I'm going to get into the fundamentals. And then the market rallied back up. Look what happened through here, right? We ran up, where did we run up to? We ran up to this level here, the 23, the 24, which is what? It's an area of now resistance because it was major support back here. But look what's happening right now. We're actually failing at this level through here, right? Look at this here. We ran up once, rejected it. Came back again this week, this week, and rejected again. And now we came back down and held it strong there. See what's happening there? So if I look at that, that's on a weekly basis. So if I go back to my daily chart now, and look what's forming here. We have a higher low, but look what's forming now. A top, and we're actually now getting a double top formation right at that level there. So if we do start to break, we want to see this sort of 21 level broken on the XLF, and then we're probably likely to start to see a bit of a squeeze on the downside. So stocks like JP Morgan, if I look at JP Morgan here for a minute, I actually see JP Morgan probably getting down towards the $70 level there. I have a target there of $70 there on JP Morgan. And the reason why is, once again, is because if I look at those longer term charts, we can see how it's rejected it, came back up, rejected it. It's holding strong here. It's this whole level of point through here, which was a resistance. And in fact, if I just draw my trend line from there to there, as you can see, right? This whole level through here, as you can see, this whole level from here to here has been a lot of strong levels of resistance through there. If I go back to my daily chart, you can see what's happening through here as well too, right? Look at this here, hit resistance. Now it's actually struggling around here. If we start to fall to the downside, which I do think is going to happen, because I'm actually, I've got a bit of a bearish look on the market this week. Then I do see probably the bank stocks are probably likely to get hit, or not all bank stocks, but JP Morgan. But if I look at just the XLF, the actual ETF itself, that's the same sort of thing as well too. And we could actually see a drop back down towards, if I bring up my weekly charts, right, we do see that we had this resistance support level through here. So we could actually even see a drop back down, back down towards these 2016 lows, maybe, right? But that's what we're seeing right now, at least on a short term. Actually, you know what? Yeah, 2000 for it to make a slight lower low. Now, long term, guys, that might come down and make a slight lower low, bounce off that there, and then be a major buying opportunity long term. I don't know. But on what I'm seeing right now, double top. If I look at this here, double top, if we break this level here, we're probably likely to race to a new low and probably get down towards the $16 level there. Now, on our fundamentals, right? So let me bring in the fundamentals right now. What's happening fundamentally right now? Even though banks are doing well cash-wise, and everything seems to be good balance-wise, right? What's happened with the banks right now is... what's happened with the banks is that we can see how, or we... let me just do this here for a minute. Let me bring up this weekly chart. we can see that, I was just looking at something. So on a fundamental basis right now, what's happening right now is the debt market's getting squeezed. So the property market is probably going to take a bit of a hit. And the reason why is because they're taking a massive squeeze on lending right now. So to buy a property, they've become so much more stricter in this economy. And that's actually what happened here in Australia as well too. We actually saw a massive property boom. And 2017, 2018, the powers to be basically put on the brakes with that, start tightening up lending rules, and therefore we've actually seen a pullback now for a couple of years. That's what may be happening with America right now. We may be getting a pullback overall over the next couple of years when it comes to property market, or it may just be this year, and then next year they start to loosen lendings up and so on and so forth. But what's happened here in Australia is that we've actually had a probably 2 to 3 year pullback, somewhere about there, maybe in a 4 year maximum. But when it comes to property here in Australia, I'm very, very, very bullish long term when it comes to these properties in Australia, and where. Because we've already had the pullback, I believe long term we're likely to see a lot of move to the upside there. But on the American market there, guys, we're starting to see a very big short squeeze right now on the debt market. So therefore buyers, there might be some sellers there, but buyers probably won't be able to be approved as much. And so that's going to create a little bit of pressure on the markets. And we're going to see probably through that the rest of this year, we're going to see a lot more downside coming in the overall banking sector, therefore the property market. So what tends to happen is that if the stock market is dropping down, that's actually a bit of a leading indicator to what's likely to happen in the actual in the overall property market as well too, right? So if we saw so anyway, so I'll just leave it at that there. So technically guys, we're seeing right now a really big overall bit of a lot of resistance where we are right now when it comes to this the financials, a bit of a double top. So a lot of weakness in the financial sector right now, guys. All I do say is that be prepared for a lot of pressure on the downside. Be prepared for what I believe is going to be a really nice pullback in the overall property market, but I don't believe it's going to stop there. I do believe we're likely to pick back up from there. So it's going to be really interesting to see how that works in correlation with the actual stock market itself as well. So on a last night, guys, I have been listening to the Warren Buffett, his annual conference and stuff like that, and such a phenomenal the way he looks at these is investing and so on and so forth. And a lot of people look at say, oh, Warren Buffett's doing this right now, so therefore he has this view. It's completely wrong. Completely wrong what a lot of people think. For example, Warren Buffett recently sold the airlines, and the reason why people thought, oh, well, he thinks the market's going to crash. That's the reason why he sold the American Airlines. He basically sold airlines. And the reason why he did that wasn't because he's bearish on them, it's because he just didn't like the companies, right? He buys businesses. And basically what he was saying, which just completely blew me away, the way he looks at it, he goes, hang on a minute, these companies, airlines are borrowing so much money and they're going to have to eventually pay that back. So that's actually now creating a massive debt on their books, which is going to cause a lot of pressure on their overall business. And he didn't actually see that happening. And so therefore, because they're basically almost going out of business, they're borrowing all this money. Therefore, he's actually sold his stake in that, and so therefore he just doesn't believe in the businesses as much moving forward. I know he's a very, very, very big proponent of Apple, but I haven't looked into much of what he does there. But just by listening to that, I can see his reasoning is that I don't believe in the model of what's going on there, and I don't have a very good outlook on that. So he'd rather sell it, actually have a lot of cash on the sidelines for when really, really, really good opportunities come along. But also, Warren Buffett's idea is have some money in the markets, but then have a lot of money outside the markets also for one, opportunities for when they come along. But also secondly is that he wants to make sure that, Berkshire is good to go no matter what, right? It's on the defensive side. So if something happens to the financial system, or if, markets close down for a few days, or maybe for a few weeks or more, that the businesses are still operating, they're still going well, and the fund is not at jeopardy when it comes to that. So if the stock market drops or whatever, he's good. So it's such a powerful thing that I learned from him, and he really went over the last sort of couple of 100 years about where America's gone and what happened through here. And what he was saying, essentially, guys, is never bet against America. And he just gave a knowledge of that. And I believe the same thing for where we are right now. We may see some more downside in the overall stock market. Now, when we say that, right, we're really talking about the indices, right? The S&P, Dow Jones, and Nasdaq. Nasdaq is the strongest one out of them. So, maybe this is the time that the Nasdaq decouples from the overall market itself, because the Nasdaq is full of these major powerful companies right now, where the S&P are full of, and the Dow Jones, they're not really full of some of the big giants that are really steaming ahead right now. So maybe I'm wrong with that. That's just a point out there. But the Nasdaq is the strongest one out of all them. But he was just saying that never bet against America, right? Because even if we do go through a 2 or 3 year pullback in the markets, right? He was saying that overall, that never bet against America, because probably 10 years from now, we'd probably be seeing a 50,000 Dow. We always get better, we always improve, we always something else comes out, and things get better and better. And that's actually the thing about when you're investing in indices, right? Is that if you look over decades at a time, and not months or weeks or sometimes minutes, when you're looking at the markets from a decade of a time, you can see how that the stocks that are not performing well, guess what happens? They get dropped out of the indices, don't they? And then only really good companies get put in the indices. Now, that's not for all indices there. Like the S&P 500 has a lot of stocks there as well. Same Russell 1000, right? But like the Dow Jones 30, top 30 stocks, and I would say the Nasdaq as well too. Nasdaq is probably one of the most powerful ones there. Those sort of sectors, right, are always being replaced. Companies are always being put in and put out, depending on how they are and the size of them and all that sort of stuff, right? So on a long-term basis, he was always saying that that in every major crash, if you just bought some of the indices and just left it alone for decades, you would be doing really well, right? Even if you bought right now and we did see a 3 year pullback, maybe more, right? Probably by the end of this decade, we'll probably be much higher than we are right now, even with a overall pullback in the overall markets there. Makes sense, guys? So it's really given me something to think about, guys, because for me personally, I've never been really a long-term investor. I've always been focusing just on the short-term income, and I've done really good at that. But it's given me some food for thought for me to where I need to be doing. I need to be looking at, okay, where's this economy, where's things likely to be at the end of this decade? And I think some people take what's happening right now, as it's happening right now this month or this last 3 months, and say that's going to destroy the whole economy this next decade, everything's going to go down, right? That may be the case. But there's so many amazing opportunities if you start to look at, say, the metals, silver, gold, stock markets, individual stocks. Like, oh my goodness, guys. And I'm going to be talking to my private clients about this as well too. Like, I've been doing some analysis this weekend at Sunday morning from right now, and I've seen 3 to 4 stocks that are likely to see major bull market runs out of this, out of where we are right now. So just because maybe the stock market may be looking top heavy or weak, I'm seeing 3 or 4 major stocks right now that are setting up to make massive moves, and those sort of positions could be, a 6-month or 12-month type of position for me. Makes sense. So I've been looking at that sort of long-term positions well too, instead of the short terms. Now I do have longer-term positions on. I'm actually very bullish Apple right now myself, on the dip, on the dip. If I have a look at Apple, so I don't always always do this, but I have done it recently. As you can see here on this arrow here, this up day through here, this is the day that I actually I went long Apple with some options, and I've got at the end of this year expiration, and they're doing quite nicely here. I don't know what's going to happen tomorrow. I don't really care. All I do know is probably by the end of this year, we're going to at least probably come up and test the top up here, probably even come and close that gap for the next week or so. Who cares? I don't care. And also I've got some other trades as well too that obviously I'll let my private clients know. So there we go, guys. There is today's Sunday little recap of what's happening right now in the economy, what's happening right now overall. I want to give you guys a bit of a pre-frame on how you should be looking at the markets as a whole, and the way that you're doing your analysis. Are you looking at videos such as Mike Maloney and looking at these major reports that are coming out and then making a short-term decision? And that's something that I saw so many people did wrong in the crypto days, right? Is that as the cryptos market was coming down so strong, like XRP and so on and so forth, what would happen is that all these people would use all these white papers and research that this is what's happening in the economy, and this is what's happening with this crypto and this company around this crypto and so on and so forth. And they see such good fundamentals, and they buy it, and a week later it goes down. And like, oh my goodness, I thought this was such a good company, and I can't believe this, and da da da. It's like, hang on a minute, no. Fundamentals mean over time, right? It's what's happening with them fundamentally right now. It doesn't mean it's going to go up every day, and we are going to get our pullbacks. So, and that's where, like, I think if you're looking to buy long term, when you combine the fundamentals and the technicals, start to combine those together, that's the true power of a really, really amazing system. When we're looking at those longer term charts, such as the weekly charts, and getting a feel of where are we right now? Are we too high? Fundamentally, this company might look good, but we've been going up for 4 or 5 months. You know what? Even though fundamentally we're good right now, I want to see a nice, good, say 5 or 6 or 7% correction out of this thing here. I'm just using analogy. I'm not using any stock in particular. And then I know I'm better to what? Do the whole analogy of find a good fundamental company and buy on a big dip, right? And then sell the rip. We all know that, right? So use that as an investing tool instead of just a trading tool. But if you're looking to get in today and hold it for a few days, guys, who cares about the fundamentals? It just doesn't matter. The charts are going to give you, because that's what they are, right? Charts are patterns and so on and so forth. As long as you got a really high probability system, then most of the time, it's going to give you a probability of that stock moving in that direction, at least for a short term, and that's what you can do to generate a cash flow. So there we go, guys. Have an amazing weekend, and I'm so excited about moving forward this year. Property market, guys, looking really sort of dampening there. Long term, after this year, I'm not sure. Here in Australia, I'm very bullish on property. I think we're going to go through a massive property boom here in Australia. And the overall stock market, it's really it's S&P 500. I don't know. We're going to make new highs. I don't know. I just sold my SPY options that I bought back in the middle of March for a very nice profit. So I'm out of that right now. But there are individual stocks, if you know what to look for, and I'll be sharing those with my private clients, that can just set up absolutely beautiful setups to capture some really explosive moves. So anyway, guys, have an amazing weekend, and I'll speak to you soon. Traders, I am running a free training, and on this free training, I'm going to walk you through my #1 trading system for the last 15 years. If you're wondering, what is my trading system? How do I actually trade the markets? What sort of setups do I look for? Then this is for you. See, on this, I'm going to walk you through all the details, but I'm going to walk you through the 3 secrets. The secret #1 is I'm going to walk you through the one thing that took me from $250,000 in debt and almost went bankrupt to actually shifting to actually making money from the markets. I'm going to talk about that one thing. Secret #2, I'm going to walk you through all the steps and all the details to my trading system. I'm not going to hold anything back. You're going to learn all the details to this. So you too, when you leave, you'll be able to see exactly how I trade the markets and what sort of setups I look for, so you can start to apply it today as well too. And secret #3, I'm going to show you exactly how and how I trade the markets for only 1 hour per day as well too. So I'm going to walk you through everything through. So if you're struggling with the trading right now, you need to see this. If you're looking for a really high probability trading system that gets like over 90% success rate, then this is for you as well too. And if you're looking for a way to be able to have freedom in your life, but also condense that down with a really good trading system, then secret number 3, you're going to love that as well too. So I'm running that free training today. So go to johnsfreetraining.com right now and I'll see you there.